So, third quarter, Frank, how are you?
It's Yom Kippur, so a little hungry, a little cranky, but otherwise feeling fine.
Well, I hope you have a meaningful fast.
Thank you.
The market seems to continue to have steam. I mean, obviously the headlines are all about the leasing demand, and that continues to be strong.
I would say so. We had about 9.4 million square feet of activity in the third quarter, so that was a slight increase from Q2, and that was really driven by a couple of large deals that we saw take place. Salesforce with their renewal expansion at 1095 Avenue of the Americas, Guggenheim Partners with their renewal expansion at 330 Madison, Deloitte with that massive deal at 70 Hudson Yards. So very strong third quarter, and you add that to Q1 and Q2, we've had 30 million square feet of leasing volume year to date.
Wow.
Yeah, wow. And not just is that a healthy year, or year to date, but that is actually the strongest single year of leasing activity, year to date leasing activity, since '02.
'02. Wow.
Yeah. Yeah. I was going in driver's ed in '02, so yeah, that was quite a while ago.
Well, in addition to that, the rents also seem to be increasing. I mean, there's been a significant sort of impact on rent.
Absolutely. So we had some above average price space added. Direct and sublet space at 40 West 57th Street. You had some large blocks added in Hudson Square. So we actually had a more than 1% increase quarter over quarter. And in some areas of the market, we're actually seeing some of the highest rents in several years. Manhattan Class A average is the highest in about 5 years. Class B in Midtown South is actually a record high, and Madison Avenue asking rents in Midtown are the highest in 4 years. So collectively, we're still down about 6% compared to March 2020, but there are many areas where you're seeing rents the highest in several years, if not a record high.
Wow. Well, obviously the trend line continues to be positive, but we always like to have a balanced view. You would think with the positive trend lines that there would be more on-spec development or just even more activity and sort of the development side of the picture.
Yeah.
So obviously there is demand in the developments that are being considered, but are we there yet?
Are we there yet? The big question. So yeah, in a lot of the areas we are absolutely recovering, but not quite at recovery or recovered. So first of all, on the demand side, we said before 30 million square feet year to date, but at the rate we're going, if we achieve 40 million square feet for the year of total demand, that is still below 2019 levels. And you and I have spoken about it, much of the recovery is being driven by a mix of leasing and conversions.
Right.
So that's helping remove some of the excess supply. With that availability, by the way, we are at less than a 15% overall availability rate. That's a great improvement over the last 12 to 24 months.
Absolutely.
But we still have about 25 million square feet of additional space compared to March 2020, which is larger than the entire Hudson Yards Manhattan West submarket. So a ways to go there. Sublet supply has tightened to its lowest level since June 2020, but we still have about 1 million square feet more of it compared to March 2020, so not quite there yet. And with pricing, as we said before, it's certainly gone up in many areas, but you take Lower Manhattan as an example, asking rents are still down about 10% compared to 5.5 years ago. With that new construction, plenty of projects that are scheduled to either begin construction or waiting on anchor tenants. We might have some of those large deals close in the fourth quarter. We'll see. So it could be a very different picture 6 to 12 months from now with projects like 350 Park, 575th, 343 Madison, 2 World Trade Center, and a few others that we're also watching very carefully.
Well, New York City is always changing, so we'll see what happens for the rest of the year.
Can't wait.